There's competitors now ramping up, and as you're familiar with BYD, which is also on the West Coast, I think they're ramping up production of their electric vehicles. Warren Buffett owns 10% stake in that. Why do you laugh? BYD is trying to compete. Why do you laugh?
Have you seen their car?
That was back in 2011. But just recently, BYD delivered 526,000 cars in one quarter, and at the same time, Tesla delivered 484,000 cars. And Musk is not bluffing anymore. He recently said if there are no trade barriers established, they will pretty much demolish most other car companies in the world. So BYD caught the attention of Elon Musk. So maybe it should also catch our attention, especially now that it is down 46.5% from its peak and it is close to the 52-week low. So, is there a problem with this company, or is it a great investment opportunity? Let's find out. If you were to invest $1,000 into this company 10 years ago, you could buy around 204 shares, and now they would be worth something close to $4,504. And this company pays some small dividends, so in that time you would also get $71 as dividends. So if we add together the current value of shares and the dividends, we get $4,575. And that is a gain of 357% in 10 years. That is very impressive, especially when we take into consideration that this stock is at its lowest point in about a year. Individual insiders, that is a check. 30.1% of the company is owned by individual insiders. So that is very nice indeed, because we know that the management has its skin in the game. They will take good care of the shareholders because they are the shareholders. And are they buying? That is an X. In the last year, we see no transactions from individual insiders. And do super investors own this company? That is a check. It is not easy to find data on that, but we know that at least one super investor owns shares of BYD, and it is Warren Buffett. He owns almost 8% of the company. We also know that Charlie Munger said on a number of occasions that Li Lu invested Charlie's money into BYD at some point in time. But I could not find any information if Li Lu still owns the shares or not. And is Warren Buffett buying right now? That is an X. Buffett sold 10,990,000 shares recently. So that is a reduction of 11.1% of his investment. Return on invested capital, that is an X at 3% 10-year median returns. And we want to see this number higher than 10%, so such a return is not great. And what do we know about net profit margin? It is an X at 4.9%, and the industry average is 7.5%. Also not impressive. And now let's take a look at share buyback. It is yet another X. In the last 10 years, they issued extra 21% of shares. So unfortunately, they are diluting long-term investors. And the debt? It is a check. It would take just few months to pay the long-term debt with a current free cash flow. So that is the only good thing we see so far. But maybe the power of this company is not in the earnings, but in growth. Revenue growth, that is a check at 23.3% 10-year compound annual growth rate. And we would like to see this number higher than 10%, so that looks promising. Let's take a look at free cash flow growth. That is a check at 40.1% in the last 10 years. I have to say that is impressive. And if you would like to find out which company of all the companies we analyzed on this channel has the highest free cash flow growth, or which one has the lowest debt, or which is the cheapest company out there, then you can do that by becoming a Patreon and getting access to our stock ranking. But if you prefer dividend investing, then you can also get access to our brand new dividend ranking, which gives you up-to-date information about all dividend kings and dividend aristocrats. The link to all of that is in the description. And now let's take a look at the earnings per share growth. That is also a check at 66.5% in the last 10 years. Okay. So this is definitely a fast-growing company. That is something we should take a note of. The dividend yield is 0.7%. So in the last 12 months, shareholders got 16 cents per share through dividends. And how is the payout ratio looking? That is an X at 12%. And we want to see the payout ratio somewhere between 20 and 50%. So it is a secure dividend, that is good. But if we would like to concentrate our investment strategy on dividends, then we could expect a bigger portion of the earnings. And what about dividend growth? It is a check at 48.8% 5-year growth rate. But as we can see, the dividends are a bit all over the place. It seems that they depend on the company's results in a given year, and that is why they are not very predictable. Price to earnings ratio is 16.3. That is rather low. Not exceptionally low, but well below the average. Okay, so now let's value this company using a discounted cash flow formula. And we will use a 5-year average free cash flow for this calculation because BYD's free cash flow is not very stable. So taking an average one should give us a more realistic starting point. And as always, we will create 3 scenarios of the future growth. So in the low scenario, we will estimate a growth of 12% for the first 5 years and then 10%, in the medium 16% and then 15%, and in the high scenario 22% and then 18% growth. So why did I use such estimates? Well, the global electric vehicle sector is expected to expand at a compound annual growth rate of 15.9% till 2035. So the low scenario predicts that BYD will do a little bit worse than the average company in the market. Medium predicts that it will do just as good as other companies, and the high one shows a scenario in which BYD is doing slightly better than other companies in the industry. So we are well below the growth of BYD in the last years and maybe a bit too conservative, but I would rather be too conservative and miss out on an opportunity than get myself into any serious trouble. So with such estimates, the intrinsic value in the low scenario is $30, in the medium $41, and in the high scenario $57. But we should always apply a margin of safety to those prices. I use a 30% one, but you can use any percentage that makes you feel comfortable. And with such a margin, we get in the low scenario $21, in the medium $29, and in the high one $40. And the current price is around $22. So only the low scenario with the margin of safety is in the red. BYD is rather cheap right now. So we have here a company that is not a money printing machine at this moment, but it is growing very fast, and thanks to economies of scale, it may become one in the future. The other thing we should take into consideration when thinking about this company as an investment opportunity is a rather low price. So we can get a nicely priced and fast-growing company. Great! Well, unfortunately, we cannot forget that it is a Chinese company. So it can be more unpredictable, not only because of the international tensions, but also because the Chinese government showed a number of times that they can change the direction of any business with just one decision. And also, if Elon Musk has his way and some sort of trade barriers will be established on Chinese car companies, then that would hurt BYD in a big way. If you enjoyed this video, you may want to check out my analysis of Tesla and compare those two rivals. Thank you so much for watching and see you in the next one.